FIFO, LIFO, and average costing. So if you would like to print out this problem, you need to go to your online text under Tools, and then you need to, let's see if I can even find it. Okay, you need to go to your online workbook and under Study Tools and select the ebook. And then within the index of the ebook, select Chapter 6, and then go to the Problem A problems. And this is, look for problem 6, 1A, 2A, and 3A, which is going to use the same thing, same problem to do it. So I would go ahead and print this page out. Just do a screenshot or something to print out that page so you can mark on it. Okay, so generally our problem, you'll have some columns for purchases, a column for cost of goods sold, and a column for inventory. I don't always do the total cost until I get done. So, you can leave that out if you want, but at some time the total is important, and I'll tell you when those times are. So notice we have inventory. We have 7,500 units that cost $75 each. And so I can put that in my beginning balance. So notice I didn't purchase that. That's my beginning balance. I'll also talk about the journal entries as we go along. I would also, I would also encourage you to somehow circle the sales or circle the purchases, etc., but somehow separate out the sales from the purchases, because it's easy to just get in a hurry and get mixed up. So anyway, then I have a purchase. I purchased $22,585. So I put that in the purchase. Your journal entry would be to debit inventory and credit accounts payable or cash for the purchase. And then I sold $11,250. So let me go back for a second. Now I have two layers, so always repeat your layers over here. I have 7,500 at 7.5, that comes down from here, and now I have this layer. So now right now they call these inventory layers. I've got two of them, so I am only looking at these right here. Okay, those are the only ones that are important to me. All right, so now when I sell 11,250, I'm under FIFO, first in, first out. So I would encourage you to actually write in this cost of goods sold, draw a line and get 11,250, because I know I need to add up to that. So first in, first out, I have 7,500, so I sell these first and these second, but I only sell 11,250. So I sell all 7,500 at 75, and you can get the total cost now or later. And then I need to get 11,250. So that means I need 3,750 more to make up that total of 11,250 in these two numbers. And again, that's why I usually put the total down, so I know I need to add up to it. So I sell all of this layer and 3,750 of this layer. 22,500 minus 3,750 leaves 18,750 of this layer. So again, just deal with the layers. I've gotten rid of all of this one, and I have 18,750 because I sold 3,750. So 18 plus 37 is 22. I total these costs up. Okay, so I total these two up. It's 562,500 and 318,750, and that totals up to 881,250. So now I have a journal entry, which you're going to do on the test. So I have accounts receivable sales, so I go up here and I sold it for $11,250 at $150 each. So my accounts receivable sales is this number, 168,750, and my cost of goods sold inventory are these two numbers, which add up to 881,250. Then I had another sale for $37.50, and again, I just look at my most recent layer, and I only have the $85 ones, so I sold $37.50 of the $18,750. So $18,750 minus $37,500 gives me $15,000 left. So my inventory that's remaining is $15,000 times $85. And again, this balance isn't necessarily important until the very end of the total, but this one is. So I have $37.50 at 85 is $318,750. So now, let me pause a second. Okay, this is a little bit too hard to erase to do it for every single one. But my accounts receivable sales would be $37.50 at 150, so $562.50 would be across from accounts receivable sales. And my cost of goods sold inventory would be the $318,750. So again, I sold $37.50 that cost $85, and I sold them for $150. Next line down, I sold $1,500. So again, I've only got one layer left, the $85 ones. So all the $1,500 cost me $85. 15,000 divided by, minus 1,500 is 13,500 at left. So 15,000 minus the 1,500 sold is 13,500 left at $85. So I'm going to make my journal entry. My accounts receivable sales is $225,000 right here. My cost of goods sold inventory is this number right there, $127,500. Next line down is purchased, $54,000 at $87.50. So I debit inventory, credit accounts payable for the $4,725,000. So now I have two layers, the $13,500 from February 5th and the additional $54,000 that I bought. So notice this line comes down there and I purchased more. Then I sold $27,000 at $160, so my accounts receivable sales would be $4,320,000 there. And I sold $27,000, so again, I wish they would have totaled these two to equal $27,000. But again, first in, first out, so I look at my inventory balance. These are my first ones in, so I sold $27,000, so I must have sold all of those at $85. And I need to add up to $27,000, so I sold another $13,500. That makes that equal $27,000 of the $54, leaving $40,500 left. So $54,000 minus $13,500 is the $40,500 left. I go over here, I make my journal entry. Accounts receivable sales is $4,320,000. My cost of goods sold inventory is these two numbers added together, whatever that is. So these two numbers added together would this go in this entry. Next thing I did was sell $25,500. I look at my inventory layers. I've only got $87.50 one left. So I sold $25,500 of these, leaving $15,000. So my accounts receivable sales is $4,080,000. My cost of goods sold inventory is $2,231,250. I purchased $45,000 more, so now I have two layers, the 15 from here and this layer. So again, two layers. And then I sold $30,000. First in, first out means I sold these first and another 15 of these to make my $30,000, leaving $45,000 minus 15 or $30,000 left. My accounts receivable sales would be $4,800,000 here, and my cost of goods sold inventory would be these two numbers added together, whatever that is. I purchased another $7,500 at 90, so now I have two layers, the $3,000 from here, the $7,500 from there, and then I sold $26,250, so the $4.2 million is my accounts receivable sales, and then my cost of goods sold is first in, first out, so I sold $26,250. I've got $30,000 in my first layer, so I don't even need to exhaust my first layer. So I sold $26,250 of the $30,000, leaving $37,50 left, and all $7,500 of these. So my cost of goods sold inventory is there. This is the important thing to total up right here. This is my ending inventory at the last day of the year, and that's the one that's important. So if I ask how much sales did I have during the year, I would have made journal entries for all my highlighted ones. 1.6, 562, 225, 430, 4080, 4800, 4200. That's my sales for the year. My total cost of goods sold for the year would be all of these numbers added up. Must be 10,891,000. And my ending inventory balance is just these two numbers added. Okay, so they made a journal entry instead of each individually. They made one journal entry for all of them. So they debited accounts receivable sales for the total of all these yellow highlighted sales, because the 150 is the sales price, not the cost, the sales price. That's why I highlight them, so I don't get the $85, which is the purchase price, mixed up with the 150, which is the sales price. My cost of goods sold inventory is simply this column added all up for the entire period. My ending inventory balance is the $335,625 plus the $675,000. Okay, so I'm going to stop this and save it and then do LIFO.